nowadays there are many styles of trading that are grouped as order flow, but in reality I wouldn't call them order flow, and I don't think that, and I'll explain why, and you'll see why and what they are. It's not to say they're wrong or whatever. They're just not what we would classically call order flow styles. And I get, many people say to me, "Oh, I've studied order flow trading," and when I ask them what they've studied, it's not order flow trading, and it's nothing like what I would see or use. So, pure order flow trading. If you are trading pure order flow, you are in and out quickly. So a few seconds. You are trading in the now. So you are trading based on what's happening right now. You will use current order flow and liquidity in your analysis and execution. You can potentially trade at any price level at any moment. That's very important. At any price level at any moment. You generally try to pick off weak traders with most order flow trading. It's a high frequency style. You should, if you're an order flow trader, be trading dozens of times. And it's not a predictive style. So you should not be sitting here thinking, where are we going to be in half an hour, or, I think we've reached a low or whatever. That's not order flow trading. So if the style you use incorporates any or most or some of these, then you're going towards order flow. But if it doesn't, if you're not trading high frequency, if you're trading once or twice a day, if you're holding trades for 30 minutes or 1 hour or 2 hours, it's not order flow. If you're not basing your decision on what's in the market right now, you're not trading order flow. And as we'll see, this is why the DOM is used. If you think about it as we get onto this is what the DOM is exactly made for. If I'll just move that away a little bit. Oh, sorry. If we think about an example, so most people out here, right, we know that the Citadel buys Robinhood's order flow, right? So retail traders are putting their orders into Robinhood, and that gets routed through Citadel. Citadel are paying to trade that order flow, right? And we know that Citadel is, we can categorize Citadel in that sense as an order flow trader. Okay, so let's have a think about how Citadel does and see if it ticks these boxes. Are they in and out quickly, a few seconds? Yes. If they trade against a retail trader coming in, they're not going to hold that position for half an hour or an hour. Okay, they're going to be in and out of that in a second or two and just make the couple of cents at whatever it is that they're being given. Is it in the now? Is it based on what's happening now? Yes, 100%. Like every market maker style, it's only based on now. You're not sitting there thinking, where were we half an hour ago? What do I think about the volume from half an hour ago? This order comes in, you will process it and execute it and base it on what liquidity is happening now. So point 3, does it use current order flow and liquidity? 100%. If that order comes in right now, can I fill it right now? Do I just keep it in the order book? But it's based on the current situation. Can they potentially trade at any price? Yes. You don't see Citadel buying Robinhood order flow and then saying, I'm waiting for the market to hit this level and then I'm going to buy, or I'm waiting for it to hit this level where I think there could be a breakout, or I think, no, it's none of that. Right? They can trade potentially on any market, on any retail order at any price at any time. And that's very important. It's not predictive. As well, they're not sitting there thinking, I think the stock's going up today or going down today or going up for the next hour or down for the next hour. They're just in and out straight away, no prediction. They're picking off weak traders, 100%, right? They're buying the weakest traders in the market, potentially the Robinhood traders. Is it high frequency? Yes. They're going to trade, thousands of times a day doing this, okay? So it ticks all the boxes. Classic example of an order flow style, ticking all the boxes. They can trade anytime using the current information only, and a high frequency. So that is an example of an order flow trader. And it's one, hopefully, that by putting this example, and most of you have heard of what Citadel are doing here, it sort of puts it into context. And again, to back up what I've just put on the last slide and what we're going to go through now. So what is not order flow trading? And this, as I said before, this is for some of you who may have learned what you consider to be order flow methods. I would not consider them to be order flow. So holding trades for minutes or hours, using levels that are based on past behavior, past volume, that kind of stuff. We'll get to that in a second. It's not pure order flow trading. If you use price charts, standard price charts at any time, you're not order flow trading. They just don't come into the equation at all. And we'll look at that more in the next webinar that I'll be presenting in maybe 2 weeks time or so. I've already started writing that one. If there's no analysis of liquidity at the time of the trade, then it can't be order flow trading. And no analysis of exit liquidity, which there can't be. If you're holding a trade for half an hour or longer, okay, you cannot be judging the exit liquidity because you don't know what it will be. And as an example with the Norden method, which is an order flow style, one aspect of it is we are measuring exit liquidity before we enter a trade. It has to be as part of an order flow. If you're trading pure order flow, I need to know, can I get out of this trade in the way I want to get out, in the time I want to get out, which is usually a second or two. So a lot of methods out there would not have these in them. And essentially there are, many styles will analyze previous order flow or really previous volume, okay? But they are not what we would typically call order flow trading, not pure order flow trading. And like I say, if they're held for several minutes or longer, they have no knowledge of liquidity and order flow at the exit. Therefore, it can't be. The whole term order flow is you're trading in the flow of orders. If you're not judging that flow of orders at the time of the trade, okay, at the time I'm doing this trade, I'm judging, can I get in and out of the order flow? That's what order flow trading is. But it seems to have morphed over the years. I spoke about this at the last webinar, right? That a bunch of tools and things were added predominantly by some retail traders and that I can understand, but it kind of morphed and it started to cloud what order flow trading is. Now, 15 years further on, it's some of these ideas have become accepted, sort of ideas that they are part of order flow because so many people have said that and used it. But for those of us that are classically trained order flow, they're not. Okay, and again, go back to what Citadel are doing and mark off with what you're doing in line with that, because the pros are still trading the classical order flow styles, right? The pros are still doing that, whether they're a hedge fund or whether they're, trading in futures for themselves. So while there is some analysis in these methods of past order flow or volume, yeah, there is some analysis of what happened in the past. Here was an area where there were lots of buyers or where there was lots of volume. These styles are also, they're more predictive. Why? Because you're holding a trade for longer. If you're holding a trade for half an hour or 20 minutes or 10 minutes, you are more predictive. You are saying, I think we're going higher. Pure order flow just means I can get in and out within the next second or two. I don't care where the market's going. It is not predictive style about it. So again, they don't constitute being pure order flow. Pure order flow is not predictive. As generally market making styles, which order flow is, market making styles are not predictive. We want to get away from prediction. That's the whole point. And that's why professionals are attracted to these methods, because trying to be a predictive trader for 20, 30 years is, effing hard thing to do, right? It's nigh on impossible for 99% of people. So try and find methods where you're not having to predict what's going to happen. So I would classify most of these as a form of TA, right? Form of technical analysis. Some form of volume analysis, where some people classify, market profile or volume profile styles of trading as an order flow. I wouldn't. I would classify them as technical analysis. Okay, and that discussion is a different discussion as well if you want to trade in that style. So again, I hear from many traders who say they already trade order flow, and usually I would say about 8 times out of 10 at least, when I hear about it and I hear what they're doing, I would say that's not order flow trading. Okay, it's just a different style, but it's been grouped over the years at that. And as I said, it's one of those things. I'm not here to say whether it's right or wrong. I'm just saying it's different.